To understand exactly where we're at right now, I need to start with a little story. And I know I always start with stories, but it's because history is super important in investing. So October 9th, 2007, SPX closed at an all-time high. CNBC was in the middle of a victory lap, and the economy was being described as the strongest of a generation. I'm sure you see where this is going. Because back then, there was something happening underneath the surface that nobody on Wall Street wanted to talk about. See, that all-time high that SPX had just hit was special. It was the peak before the last recession, the dot-com bubble in the year 2000. So SPX had taken 7.5 years to make a new all-time high. Essentially, it'd been flat for almost a decade. Over that same window though, gold had gone from $260 an ounce to $750, almost 3x, right? So in the 7 years leading into the 2008 crisis, holding SPX gave you nothing in returns while gold had tripled. The chart was telling you something. It was telling you something was coming, but Wall Street wasn't, because they didn't want to tell you, because they didn't want to believe themselves, I don't think. Because 17 months after that October all-time high, SPX hit $666, 666, a number befitting Wall Street, by the way. It was down 57%, and gold was at $1,000 and climbing. And there's this weird, historical quirk with markets, a pattern that to my knowledge, has never been broken. When gold outpaces SPX at this rate, shit gets bad. It gets really bad. But is that what's happening right now? Well, let's look at an actual chart to figure it out. So right now, SPX is at 7,400, 7,500, and gold is at 4,700 an ounce. The SPX to gold ratio is 1.56. What does that mean? It means one share of SPX is worth 1.56 ounces of gold. That sounds healthy for SPX, right? SPX is strong. Since 2014, the ratio has been averaging over 2, so 1.56 is actually pretty low. And in 2000, it peaked at over 5. So 1.56 is the lowest we've seen since 2014. And in 2014, it was heading up and recovering. Right now, it's heading down. The last time it was heading down towards 1.56, well, that was 2008. But something even crazier that nobody ever explains on YouTube is happening. SPX has been losing value against gold for 26 years. If you actually look at this chart, SPX has lost over 70% of its value against gold since the dot-com peak. And this is a crazy fact. It blows my mind that nobody really talks about this. And do you know why it's crazy? Because SPX is up massively in dollar terms. I mean, it's making new all-time highs all the time. It keeps pumping. So how can SPX be breaking all-time highs in dollar terms, but be testing 2008 lows in gold terms? Because the US dollar is useless.